into the IPO.
Simon Mariner from Aliom, should we see this as a litmus test or maybe a proxy for economic growth in China and the confidence in that growth?
Well, I think that the high level view is talking about the confidence in the global market for IPOs. Certainly, we've got to think about May being a very volatile, month. We saw stock markets tumbling, a lot of economic uncertainty. So, it's interesting to sort of see people's sentiment in terms of sort of getting back and getting behind some of these things. I think the original thing was that the investors were unprepared to pay the 30 or share price that would have meant 30 billion for Agbank, and then it came down to 19, which is a little bit more reasonable. Obviously, they've managed to get that one away, but there are other intrinsic issues there with its weakened profitability compared to urban competitors. On closer to home on Valemus, a little bit of a different situation now. I think a bit of a roll of the dice. I think they're originally asking for or trying to raise or get away 1.5 billion. That's been pared back to 1.22. Not looking like that's going to get away. They may revisit in March and April. What it means is for the leads. I think in that case it was Deutsche, Mac. And Goldman Sachs. It's a bit of a blowout for them, but for the the individual mum and dad investors, it sort of shows that they're not potentially ready to re-engage with those primary stock markets. However, just yesterday we saw 490 million raised by Boral in an accelerated rights issue, but that was on the back of upgrades to profitability.
Yeah, and arguably a Mac will get that back through its new Chris Lahire lead position on that one, so it's set to sort of net some quite rich returns in all things considered. Do you think, Simon, that investors could be just shunning the mere size of these offerings? James Kirby earlier from Business Spectator saying, look, if you've got a slew of smaller ones, say around the $100, $200 million mark, that's kind of less of a big bang, frightening prospect for investors.
I think investors are confused, and I think the market's confused. Just heard from Chris recently that you're taking sort of bullish signals and bullish interpretations from the market. For instance, the euro rallying up quite nicely is a nice bullish signal. But you look at the US stock markets last night. We had an amazing lead out of Europe, as we spoke about, and then they opened up higher. Gains were slashed in the last hour. I think you had major indices bouncing up and down in and out of positive territory. So I think the market's a little bit confused. They don't know what they want to do, and the major dichotomy I think is potentially between on the one hand we've got a Nobel Prize winning economist coming out of the US saying we've got to have a kitchen sink strategy. We've got to throw everything fiscally and monetarily at these economies to make sure we don't slide back into recession, to make sure that the US avoids a decade of stagnation like Japan. On the other hand, we've got the likes of Europe and strong economies like Germany out of Europe saying, listen, austerity is the way to go. It's the age-old dichotomy, I think. If you think you can cure a hangover with more booze, then that's the way to go. But sooner or later, I think you've got to face the music and take the pain and take the medicine.
Yeah, Chris, in terms of the market and how it's looking at this issue, this divergence of opinion about austerity, how can markets get certainty and move higher when, clearly none of these issues about debt or, spending and more stimulus is not going to be quickly if you can. In terms of pulling all this together for the day ahead, what are you watching out for? And I know you watch data through the session. Is there anything key that we want to look at today here in Australia?
Yeah, interestingly, we haven't really got any significant data during our domestic session, so we're going to be sort of steered mainly by sentiment, I think, and some of these conflicting signals and conflicting messages, coming from all different economies globally, and certainly from the raisings going on in the equity markets as well. Tomorrow, though, is pretty important. Here locally, domestically, we've got some employment data out, but also Bank of England and Eurozone interest rates. Don't expect them to move, but certainly their accompanying statements will be pretty key to trying to work out what's going on behind the scenes in terms of their moves going forward.
Simon Mariner from Aliom, thank you, and Chris Western from IG Markets. Appreciate all of your time today. Thanks.
Thank you.